And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning. Welcome to the market forecast. Looks like we've got a doozy of a day in front of us. Today is Tuesday, September the 28th. I'm John Hoagland. Thanks for trusting me with your time. As always, we know we're looking for context, good risk management, and patience. It's going to take a lot of patience for us today, I think. 7:30 this morning, the trade balance came out. We also had preliminary retail inventories and preliminary wholesale inventories. 8 o'clock just now, the Case-Shiller and FHFA home prices just came out, so we're seeing some influencing on the market already this morning. 9 o'clock, consumer confidence comes out. There are several talking Feds today, most of all including Chairman Powell. Powell is testifying in Congress today about the state of the U.S. economy. Two of the big major points they're going to be, I'm sure, talking to him about is, of course, the debt ceiling and what happens if we do not raise the debt ceiling, and the insider trading scandal with Rosengren and Kaplan resigning yesterday from the FOMC. U.S. equities are opening sharply lower today as bond yields rise in anticipation of the end of quantitative easing, and I'm sure many other reasons. Crude prices continue to move higher on low U.S. inventories. We have the API coming out today. EIA expecting about a 2.3 million barrel draw tomorrow. We're at like 3-year lows in inventory in crude, something like that. And no sign of relief in surging energy prices in Europe. Certainly some challenges going on there. So the title, Volatility has jumped amidst eco-political storm. It's up over 10%, back above 20 at 2072 last I checked. Dollar index also, dollar strong, 93.75. The 10-year yield also up back above 1.5 at 1.54%. First time we've seen that in a little while. As always, make sure you hit that lucky like button. Make sure you share, comment, question, feedback, and heckle at will as usual. Subscribe to our YouTube channel. You get notifications when we do go live. We have the Coach's Playbook today at 11:30. We have the Futures 401 class. We're going to have a very basic overview of the market forecast today. Or excuse me, I always say market forecast, market profile today and tomorrow. We also have group coaching tomorrow. We've got a couple of good questions from a couple of our watchers here. We've got a good one from NM. We've got a good one from Fred Decker. We've got a request to take a look at MACD from our good friend Harry, and those are just some of the things we're going to be looking at in group coaching, and that is again tomorrow. That is the link for futures classes today, and then we've got the second link here is the link for group coaching tomorrow. Got to say hello to everybody as always. Eddie, first in the room, you win the prize. Theo, good morning. Frederico, Brett, George, John, Bill, good morning. Ryan Williams, Nico, Steve, Jerry is awake. Hope John is too. Murph, good morning. Every day is Murph's favorite day. Deanna Floyd, Laura, good morning. Charles Nelson, Zahurul, Zarain, good morning. Brian, Jason Hukel, NM. Maybe I was a little late to start today. Good morning. Harry, good morning. Janusz, Trading Research, Daniel Keith, good morning. Rob T, Don K, Dead Letter Opener. Dead Letter Opener, I was fascinated to hear that you were a soundboard operator for Herman's Hermits. We were talking about Herman's Hermits last week, and you posted that on the YouTube comments, and I think that's fascinating. It must have been a really cool time in your life. All right. Stephen C, KM, Vince, good morning. James, Jim, NM, wow, I had no idea FOMC had insider trading. Let's give them more power. Yeah, right. Do you ever trade futures options? It's been a while since I've traded options, since pretty much when I was on the floor, and I pretty much used it for a hedge against positions in the outright S&Ps. And Justin C, good morning, everyone. All right, I got my notes. Today is one of those days when I find myself really wishing that I was going to be able to know what was going to happen by the end of the day. We had our equities in pretty much range bound yesterday. We had very even profiles in an inside ranging type of situation for the past 3 days, and that even profile tends to make the market go looking for business in other areas. It's the market has used its ability to facilitate trade at that level, and it goes looking for other levels. All right, Robert S., starting your combine today. Good to see you. Good luck, trade well, patience, humility, creativity, all part of being a good trader. Good. Hello, Casanova. Hello from Canada, eh? Don't you know? All right, welcome, everybody. Again, I wish I had the absolute finite answers. Nobody has. Nobody's got them. Crude oil just opening up. Looks like they've closed the gap already. We're going to take a look right now. I'm going to put that on the daily chart, and then we'll start with the daily in crude. No particular order, just going left to right. Everybody knows the rules. One bite only. All right. So we have volume and open interest strong yesterday. The continuation to the upside seems to be building momentum. Justin C. got funded yesterday. Very nice. Yeah, Nemo, it is legal for Congress to insider trade. Good morning, Kim. Andre. So we see some pretty decent volume coming in. We had an increase in 15,000 in open interest. This move is growing legs. If you remember, we talked about this potential head and shoulders, and where the targeted profit level was all the way up here. Look where we're going. Of course, technically that was something to look at. Fundamentally, we're getting a lot of help that way. So volume and open interest strong as we are approaching weekly kickoff high, which is 76.90. The market appears to be in a healthy upside auction, but you always want to be aware of the vicious moves in the opposite direction. They can be fast, they can be sharp, they can be very painful. Make sure you are protecting yourself. This week, today, the weekly kickoff is in play. Take a look at the 30-minute chart. So we've left a mess below. We've got gaps. We've got naked points of control. The move to the upside here has been relatively strong, yet and emotional. We have some overnight longs. We were going to be opening with a gap. We have closed the gap already. If the move is going to continue, the gap close could be an opportunity for us to look for an execution. We know we have some overnight longs. Have they had the opportunity to reconcile those longs and give us an opportunity for a better trade location on a weakness? We're waiting for the API this afternoon. We have the EIA tomorrow looking for another 2.3 million barrel draw. We're a little short on crude as far as stocks are concerned. So a lot of that has to do with the fundamentals driving price higher. I'm going to be cautious. The range from yesterday, again, it was a relatively range-bound day, just a continuation and opportunity for traders to adjust inventory. It's a very even bell curve, and the value area is very small. So the opportunity for us to have a value area special situation play doesn't offer that much of a great opportunity. The value area special situation is when we open out a range in value, when we reaccept inside of value from the previous day, there's a probability that states that at some point during that session today, price could move all the way to the other extreme of value, but it's just not that big a deal. What are we looking at here? We're looking at, let's call it 75.60 down to 75.30. It's a 30-tick value area from yesterday. Not really looking for anything fabulous from that level. Here we've seen the market close the gap. We're seeing a little bit of support coming in here. I'm going to try and stay patient. We got a little bit deep into the range from yesterday. I would say we probably had some longs looking at the gap close for an opportunity for a long. Their stops just got hit. I'm probably going to be letting a little bit more of the early range establish itself before getting involved. E-mini S&Ps. Okay, here's the daily. Let's make it big so we can all see it. Yesterday, we had an attempt to move to the upside. Volume and open increased on a down day prior to a breakout. We're going to see this breakout as it happens on the 30-minute chart here shortly. Economic and political uncertainties seem to be continuing to mount. Debt ceiling is probably the most pressing thing we're going to be thinking about today. Is it just me, or does it seem like the speed of things keeps just increasing? It seems like there's more and more information that we are tasked to decipher and make decisions every day. It seems like it's getting faster and faster. It just seems, maybe I'm just getting old and slow. I'm not quite sure which one it is, but it seems like the speed of things is certainly increasing. 5G, I'm sure, has a lot to do with some of that. Technology, all of that. It just makes it much more difficult for us to take in all this information, break down what's most important, and make good opportunities or good hypotheses for opportunities. Okay. Volatility is increasing. Remember to try and stay patient. When the market starts moving fast, it incites emotion. It incites activity. And I've found in my past and in my history that when I start getting excited, I start doing things, looking for trades instead of being patient and waiting for trades come to me. I have to remember that I'm going to miss trades. And, it's okay. There's going to be another opportunity coming down the pipeline. Take a look at the 30-minute chart. Bear flag. We've been talking about it. We've been looking at it. Yesterday, look at the profile. Narrow range, very even bell curve. The market was ready to move to another level to look for participation, to look for two-sided trade, to increase volume. We had a little bit of an increase in volume yesterday. We added 6,300 in open interest yesterday in a range-bound day. It ended up being a day that moved lower, so we're going to be thinking about that as maybe some longer time frame sellers coming into the market where they're continuing to get paid. Our overnight inventory is short. By the way, this bear flag, if it plays out to fruition, has the market coming down all the way down to 42.44. 42.44, all the way down here. That's the measured move from this breakout below this bear flag. We've got weekly kickoff low in the standing in our way, 43.55 even. We've got some naked points of control to come down here and check. We've got last week's low along the way down there as well. But it's entirely possible. Going back to what the short time frame traders, our direct competitors, are looking at, They're holding shorts today. They're looking for the longer time frame traders to come in and continue to push price lower. If they do not, they can give us an opportunity to have a shot at a short in better trade location than we are now. When we're looking at the market heading lower, we want to find opportunities to sell strength instead of selling weakness. So gap rules, inventory overnight short, look for the opportunity for a pullback towards yesterday's range to find an opportunity if your hypothesis is to look for shorts. With that breakout below that bear flag, maybe a pretty good chance of it. Weekly kickoff falls. We looked below it yesterday. We did not continue to hold below it. We closed back above it. Higher volume yesterday. Open interest, not so much. We added some volume, but only 400 additional contracts in open interest. Nothing huge there. Bear flag breakout yesterday. Well, here it is. Take a look. Bear flag yesterday. We broke out. We settled. We spent time. We accepted price by the way we closed below that level. Are we going to accept price below weekly kickoff low today? Only time will tell. We've got a lot of shorts in this market. If we are looking for shorts, we may have the opportunity to take advantage of our overnight shorts for a move in the opposite direction and a better opportunity at better trade location for a short. We got this bull flag, or this bear flag here. So it's a trap for bulls. We broke out, we settled, we spent time, we consolidated below that trend line. Now we have a chance to continue or consolidate below weekly kickoff low. Remember, time marks acceptance of price. Yesterday, we marked acceptance of price below the bear flag. Today, we can either through time or momentum accept price below weekly kickoff low, which would continue to have us moving lower. Every time I say that, I remember to say to myself, don't forget, these markets are extremely resilient until they're not. So what else do I have here? Yep, that's about it for the NASDAQ. Gold's got a little bit of an attitude here this morning. Okay, we got another downside breakout, another bear flag. We had bull flags, 3 of them up here. We've got 1, 2, 3 here. Okay, if we were going to be looking at this as a reversal pattern in a head and shoulders, weekly kickoff is our target for it. Weekly kickoff is 1722 even, and looks like we may be headed there. We've got volume and open interest slowing as we continue to push down towards our weekly kickoff low. Now that may change today, but we lost 1,400 in open interest yesterday. We lost volume in this continuation of the short time frame structure to the downside. It's still intact, the structure to the downside, but is it doing a good job is always the question. Take a look at the 30. All right, so here's our most recent bear flag breakout. Okay, so it happened overnight. We've got settlement all the way up here. We've got a lot of overnight shorts here, and we're looking for an opportunity to see this market get down to 1722 weekly kickoff low. Again, time marks acceptance. The longer we stay below here, the longer we start to test this level down here, the more lower pricing is seeming to be accepted. Again, we've got a lot of overnight shorts. We've got a pretty big gap. Yesterday was a relatively narrow range again and an even bell curve, so the market is seeking new levels to facilitate trade. So hopefully maybe we'll get the chance to see weekly kickoff and play today, see if that gives us a good opportunity. If, again, I'm looking for shorts, I'm looking at the overnight inventory. If they don't get what they're looking for right away, you may see a pull back towards settlement that can give us better trade location for shorts, again, if that is in your hypothesis. To the euro. All right. Whoops. All right. Have we exhausted the buyers at weekly kickoff low? We are currently below it. We are currently below last week's low, or at last week's low. 1705 is that weekly kickoff level that we're going to be using as a pivotal level, short below, long above. Be careful with doing that, because if it becomes magnetic, it can chop you up. Downside auction seems intact and looking healthy. We got a little bit of a spike in volume yesterday. We added 6,000 contracts on a down day yesterday. Some money coming into the short side. Again, short time frame, call it medium time frame downside structure is certainly intact. All right, so here we go. Here's our support, resistance. I don't think we've closed the gap here yet this morning, but again, we're having a difficult time getting back above the level where we saw buyers in the market for the last couple of days. Have we used them up? Have we eaten up all those buy orders? Seems to be showing so, because we are holding and spending time below that level. Again, this is pivotal for us. So now we've got a gap to below a support level. If we can't close that gap, there's only one thing left for us to do, and that's range or continue the move to the downside. Have we reconciled our overnight shorts through consolidation? Sometimes this chop does a lot to eat up inventory. It gives traders the opportunity to change their positioning, to even up inventory. That's my question. Still holding below weekly kickoff low. It's an interesting level for an execution. The 10-year. All right. So volume and open interest continue to build. We had a little bit of an update. We added 23,000 in open interest to the downside. We are now currently looking at acceptance below weekly kickoff low. The downside auction intact, looking healthy. Take a look at the 30. So here we go. Here's a overnight settlements all the way up here, 131 to 25.5. Market takes us down below weekly kickoff low. It almost looks a lot like the euro, doesn't it? We've got a weekly kickoff level. We were holding above it. We're now holding below it. We've got overnight inventory. We've got consolidation that might be enough to reconcile all that overnight inventory. And we're looking at a market that is representing decent, healthy structure to the downside. The weekly kickoff is probably our best looking level for us to be focused on today. And there could be a measured move down to 130.21 all the way down to here. Where did I see that? Let me just take a second and look at this. Yes. So we had our falling triangle here, okay? The pole here goes from the high of it to where we found support. When we break out, if we take that level, that distance from the high to the breakout level here and measure it out, it takes us down to this level. So we certainly have some visuals and some ideas for continuation to the downside, as not only is this a measured move, it takes us to this swing low from back in June. Right now, now let's go to the nat gas. Sorry about that. Boy, the nat gas, what an interesting time to kind of start looking at it. Yesterday we had a big up move on really good volume, but we lost open interest, which is blurry because it's still somewhat in rollover. Today is the expiration of the front month, so we're still dealing with a little bit of blurriness from the rollover. The February 2014 swing high is 64 even, and I thought I put that on here as another level to be looking for. Is 640 even, I should say. Did I say 640 even? All right, so I thought I'd already put this on here, so forgive me for... But that's the next swing high all the way back from February of 2014. Big volume, and again, open interest is related to rollover. Take a look at the 30-minute chart. Boy, we're getting a nice pullback off that high. We had a lot of overnight longs here. There's a lot of mess that this market, because it's so emotional and one directional, has left behind. We've got points of control that have been unchecked. This one is checked. I'm going to take this one back. But this one's in a gap, so it remains unchecked, and the gap remains unchecked. We've got, another naked point of control here that I haven't even put on here yet. There's tons of them down here, and the market is just ignoring the weak structure down below. It happens when there's something, as important to fundamentals as is going on in the energies right now. So we had a lot of overnight longs here. This is what an overnight inventory adjustment looks like. We had a lot of longs. The market opened. The longer time frame would not buy it up here anymore. The overnight weaker hands longs decided we're out. They jump out en masse. It took an hour and a half, but it happens pretty quickly. Remember, the upside move is very strong. The opposite moves are going to be very strong and vicious and fast. If you catch one, make sure you take a profit because they're probably not going to last too long. We've had our inventory. We've been unable to close the gap so far. That's very interesting to me. But don't fight directional markets, but make sure you're well aware of how these markets pull back. You get very vicious moves in the opposite direction, and I believe we just had a pretty good view of one of them. Again, overnight inventory. All of our traders last night were buying and pushing price higher and higher. We can assume that they were weaker hands, just looking for a continuation on the U.S. Open. The U.S. Open did not provide that opportunity. As a matter of fact, it looks like they got a little bit edgy before that. 7:30, 8 o'clock, the market. I mean, they adjusted inventory before the Open even came. And they may be done. Always goes crazy when the U.S. opens up. Yeah, that's true. So, all right, we've only got a couple of minutes, and I'm really thinking about starting to start this at 7:45. I know a few of you have said that might be a good idea. Still considering doing it because then I'll have more opportunity to chat back and forth with everybody. Everybody has such good ideas and thoughts in these markets. I think it's important for us to go and look at those. So give me a little bit of time. Give me a little bit of time to catch up, and we'll see about starting at 7:45 if that's okay with everybody. Take your deep breath. Stay humble, grateful, and creative today. We'll see you for the Coach's Playbook. We'll see you for the Futures 401. Again, the basics of the market profile. And we'll see you later on. Have a great trading day. Get out there and profit. I'll see you in the pit in about 30 seconds. Trade well. See you later.